Hey, this is Wade with Trade ATS. Happy Monday. So this is a new series I'm going to be putting out every Monday, going over different trading ideas that we think are developing for the week. These are things that we're looking to potentially trade in-house that we want to share with you. I'm going to be sharing with you the trading idea, some ideas for risk management around that. And of course, these things need time to develop. We may not actually trade them all, but I'm going to share with you what's looking generally interesting. So that being said, full disclaimer, this is not financial advice. This is for educational purposes only. So if you're going to trade them, you do it at your own risk. But either way, we're going to share with you the idea and also some lessons along the way so you can learn how we're looking at the markets. So also FYI, we just did a huge software update for Action Threshold software, our proprietary chart mapping software. So I'm going to be featuring that in these videos so you guys can get some idea of how that's working and how it helps us with our analysis even further, giving us a deeper inside look into the market. So that all being said, let's jump into the charts and see what looks interesting this week. All right, so our first opportunity is pound USD right here. We're trading, we got a 30-minute chart here for our entry and exit, and our directional bias is going to be backed up by the daily here. So the idea being that if we could predict where the next few days are likely to go, then trading the 30 minutes would be much easier if we already know where the flow of money is going, right? So where's the flow of money going is the question. If we look on the daily, we have a cycle right here. This is a full confirmed cycle. We have our expansion line or our value line right here. You see we got hung up on that, but we're starting to deviate away from that. So that is a clue right there in itself. But you can see that we have our swing low leg here. Our swing high came up all the way up to this point, and then we fell all the way back to value there. So, and we also have this gray box here. This is a minor framework box, we call this. This is just part of this last cycle here. Until this one becomes more significant, it's just included in the last cycle. So we are also deviating from that minor framework value as well. So the idea I'm looking at is that the next few candles potentially take out liquidity down here at the swing low point. We have our liquidity line right there. So we got to ask, well, how much meat's in the trade? All right, from where we are right now, currently, there's about 97 or so pips. So we'll call it a 100 pip opportunity. It's decent. It's not huge, but it's decent. It's worth looking at. So what's the interesting setup here on the 30-minute? Well, right now we're operating in what we call a major master pattern cycle. This is where multiple expansion legs have been established. So right here we have 1, 2, coming back up 3, and we're on our 4th expansion leg right now. Let's also click on institutional mode. We'll get a little bit more in-depth look into this market here. So give that a second to boot up. All right, there we go. So here you can see the expansion leg count. We have 1, 2, 3, and now we're on our 4th right now. Since it came through this liquidity. So this is set up right now because we are at value. We're starting to get a little bit below. So you don't want to trade, if we're expecting this to go down right here, we don't want to go heavy below value. You can see a lot of traders chase the market down here at this level because they thought it's finally breaking out, and then it brings them all the way back to value. Value is where it all starts. We need to know we're getting a good deal, or at least paying fair market value price in trend. We do not want to chase. So right here is where it starts. Now, we always recommend that traders break their positions into multiple positions. If you're really good at trading, I would say give yourself 3 bullets. So your max position size, break that into 3. If you're just getting started, you might want to go 5. Okay, so 5 smaller positions to be creative and be able to navigate into the opportunity. So if you would want to start your first position, again, you can do whatever you want, I'm not telling you what to do, but you would do it at least at value right here. Now, if you're going to trade 3 positions broken up, you can go all the way up to where? Well, where does the idea fall apart? That's the question. So we're going to look over here on our daily. Ideally, I would want price to hang below this expansion line here. It might trade back up to the previous day's high right here and capture, because there's liquidity sitting above there as well. It might run up there maybe in the Asian session, but I really wouldn't want it to spend too much time up there. If we break this high on this previous day with any strength at all, and then hold price up above there, I don't really want to be in at that point. So that's, to me, where the idea falls apart. So what price is that over here? Well, we take a look, we put on our sync crosshairs here. It's a new feature in our software here. If you look at that, let's look at, okay, where is this liquidity line on the daily? So if we look at where the sync crosshair is, that's still below that last daily high. So if we get through here, we're potentially going to go up to right here. That's the last daily high. You know, it's basically this high point right there. We also have an order block projection right there, almost pretty much that exact level. So I really would like to stay not too far above this. I'm also looking, do I have any supporting framework from before to manage risk by around those levels? Yes, I do. I have an expansion line right here and also have one up here. This expansion line is too high. I do not want to go to this price. Okay, so I would say my price level or my range that I look at that I do not want price to establish in or get stability in is going to be between this level and this level ultimately. That being said, I'd be willing to go in multiple positions starting at, my next one would probably go above this liquidity, and I would do another 1 or 2 positions up to around this general range. And if it goes outside of that, I would close all positions and say it's a loser at that point. So that's where this idea would start. That's how we would work it. Now we would work it back down to this low point here. If we go and measure that just to the low point from where we are is about 74 pips. If we measure the entire opportunity up to where it falls apart, there's about 147 pips in that deal. So it's decent. It's worth working, because if you layer in, remember, we're not losing attachment to this cycle right here. We still, even if it goes up, we're still looking to get back through this value level and come down and attack the swing low point down here. That is the upside that we are looking for. And also coming to the liquidity. If we look at this liquidity line right here, it is at the same exact level as the liquidity line on the daily that we're headed for. So that is your full fulfillment right there. We're also looking at the distribution phase here. You can see that we have been in a distribution phase. We could tell that by retail traders going net long inside here. So they're starting to go net short again, which is fine. But what we would want to do, what we want to see is that the market pushes down and then retail starts going net long again against the daily direction. That would show that we're in the distribution phase and it's good to take profits off the table. So that is the idea for pound USD. Let's go to the next one. So the next one I'm looking at is none other than gold. So if we look at what's happened here on the daily, we can see that we have a cycle back here. We have swung low out of that, swung high back up to liquidity here at the top, took that out, and now it's been working its way down. So my thesis is that there's a potential probability that we could go from where we're at now down to the swing low liquidity, referencing back that red box, which is about 150 or so pips away. Again, decent opportunity. This is very similar to pound USD, what we just went over. Now, if we look at the 30-minute, what is not okay on the 30-minute right now? Would you just sell right here? No, you wouldn't. Our last major value point is established back over here. So we would either want to wait till we get a new value, or we would want to see a pullback happen at this level. So we're looking at, on price-wise, around like 1916 would be the price where we would want to get as close to it as possible. Now, we've already respected that price right here. You can see it came up and took that out. Or came up right to that level. So I am mindful of that. We might be well on our way to just go there from now, but I would still want to get my price either at this level, or if we establish a new box somewhere in this range, pull above that value, then you could hit it from there. Now, where do I think this idea falls apart? Again, on this one, I would be looking to go nothing higher than the previous day's high. We could come out and take that out, but I would not want price to establish much above that. Do we have any framework that is around that level? Let's take a look here. So yes, we do. I really, based on the previous day's high, which is about right here, I really wouldn't want to trade much above this last expansion level right here. I would want to hold that framework in trend. So as the way it sets right now, first position would go in around value right here, and would not want to put in any more positions much above this level right here. That'd be kind of my breaking point on this trade. That's it. We are in the distribution phase already. You can see the traders are going net long. Right now, they are currently, turn off sync crosshair, they are currently about 64% net long. So I would like to see that increase as well as the market picks up, coming down to that swing low point down here on the daily. So that's that opportunity. Not quite set up at this moment, but has potential in the next few days to give you an entry on that. All right, the last one I'm going to briefly take a look at is EURUSD. We have a lot of traders that trade EURUSD on intraday timeframes, so I always like to visit this one. And so looking at this, there's a few things that are noteworthy. Right now, there is no setup, but where is it likely headed? I'm looking at the daily pushing down right here. I know that there's going to be liquidity, even though we don't have a liquidity line down there. I know that there's still going to be liquidity down below these levels here, but I think there's ultimately an opportunity to come and revisit the center of this minor framework value right here, and potentially this value point right here. If we jump up to the monthly real quick, there's something noteworthy here. We have an expansion line that's all the way back from 2015 era, that we're in this big cycle on the monthly time frame. And you could see that just last month, we traded above it very briefly, but then pulled back below. So we're asking ourselves a question: is the monthly going to rotate and come back down, potentially to these lows right here over the course of maybe the next month or a few weeks? We'll have to see. If that happens, there's about 270 pips from where we are in that opportunity. But we're looking at this reaction, this story. This tells a big piece of the potential story. If we're right about this reaction, then all the time frames below, since the monthly is giving up, they couldn't get above that value line. The monthly holders are going to let go of their long positions, they're going to sell, and that's what's going to cause the continuance on the lower time frames to continue to travel down. So if that's the case, that's going to add some more strength, or I should say weakness, to the lower time frames, pulling us back to these points of gravity. We have this one right here, we have this one down here. So that's the overall idea, but I think our first stop, providing we hold in this downtrend, this immediate downtrend on the daily, is getting below these lows right here. Once we get below those lows, I want to see us come to here and then down to here on this last major framework expansion line right there. Now, as far as entry at this moment, you can see over here on the 30-minute, there is no entry. We are in a distribution phase. If we look at our retail trader sentiment, retail started going net long about right here. You can see that pops in this little line. If you can see it, that shows us a sentiment shift. From that moment, retail traders went net long, and you could see the banks kicked off this gap right through value, and we're in the distribution phase already. So when you're in the distribution phase, this is kind of already the profit zone of a trade that's set up back here. You can see these were above value. We had the expectation that we were going to continue in this downtrend at that moment, potentially. And then it kicked off right there. That was our confirmation, came up, held value on this candle right here, and it's been off to the races ever since. So we would need to establish some new framework to be able to really manage risk. That is not there yet. So if you're already in this trade, congratulations. I would not go much back above this value point up here. If you're in the money, I would definitely be looking to take your profits. But if you're looking to get into the trade, I still think that there could potentially be some meat to the downside. But I would wait for that new framework to set up so that you can get manage your entry. Now, as far as where does the trend fall apart, I am calling the price. I'll tell you right here. The price is going to be about 1.09629. That's going to be the price where I would be very careful around. There's going to be a little bit of a range up there if we trade, but likely we're going to close this day where we are right now. So that's going to be equal to around the high of this day. So when this day closes, I don't want tomorrow to trade much above that high. So let's see where that price is over here. So that's pretty much that high right there on the 30-minute. So I do not want to see much trading above that. They could run it up there, take out stops. I would potentially put on a position up there. At that point, this gray box would become major framework. We would get an expansion line at that level, providing no other boxes form between now and then. But that would be it. I would like to trade, ideally get an entry above here, and I really wouldn't want to trade above these major framework lines. Would want to hold below that. But it's already taken off. I think we're still completing this distribution phase. A lot of retail traders are going long here. And what happens? Where's the most predictable liquidity in the market? It's trader stop losses. So when traders are going net long against a clearly short trend, all their stop losses are going to be stacked below every single low in that downtrend. And the market maker is going to continually push it down and keep harvesting that liquidity to further the trend. So got to be mindful of that as well. All right, that's what I got for you guys this week. Remember, be safe, trade your own trade, make sure you got your plan straight. But these are the ideas that we're looking at, so hopefully you got some value from that. If you like what I'm doing here and you want more of this, we're going to do this each and every week on Monday. Make sure to like and subscribe. That way you get notified every time we put out a new video. Till then, stay safe. We'll see you next week.